Okay, so today is February 19th. It is 3:23 a.m. I've already looked at the market. I observed it. The market has already did its move. It sold a lot of pips, and currently it is in consolidation mode because it already did its move. So today I am focusing on internal versus external structure, the vocabulary that I've learned throughout the week, and with the vocabulary, I'm going to create a visual catalog. This is my visual catalog. And if this benefits you, amazing. But I am a visual person and I need to be able to see it. So I created this idea to record my thought process, my aha moments, my breakthroughs, so that not only can I study and benefit, but if someone else can benefit too, amazing. All right, so let's go ahead and get started. Okay, so I had markings because you have to mark up your chart daily, or at least I do, because I'm a visual learner. I've already took it off, so this can be a learning area. In the beginning of my trading career, I just saw, hey, it's a lot of green, it's a lot of red, little boxes. In but honestly, the market tells a story, and our job is to figure out what's the story. What is it trying to tell us? Okay, so this week it has been very bearish, and even the last few weeks, it's been having bearish moves. Okay, I've already did top-down analysis, so I know exactly where the market is. The market wants to come down here because this is a strong key level. And as you can see, it's getting closer and closer because there is money down there. So first, the vocabulary. The vocabulary that I've learned that really changed how I see the market. And it was so simple. Oh my goodness. These two little lines, which I used to call resistance and support. But this week, I no longer call it resistance and support. Now it still is, but this is retail vocab. Because when you think of a resistance, you're thinking, hey, the market is going to go up. It's going to have resistance, so it must come back down to the support. When you think of a support, it keeps you balanced. It won't let you fall. So it's going to go right back up to the resistance, and automatically it's going to go back down. But the market doesn't move perfect like this. It doesn't. So instead of calling it a resistance, let's upgrade that language. So now we're going to call it a liquidity pool. And what we're focusing on is that the market wants to take out the sellers, but not just the seller stop losses. And then your support, same thing. It's a liquidity pool. We're now thinking that, hey, there is some money in this area. In this case, it is now the buyers' stop losses that the sellers want to take out. before the true move. So now we just upgraded that language to smart money. Smart money are the people who make the market move. Because our money, we can put maybe thousands or maybe even $1 million in the market, and maybe that will be, I'm gonna show you maybe the candle. You see this candle right here? At the very most, right here. That's it. Our money does not move the money, the market. So we must follow the market. Okay. So now that we know the new vocabulary, think about money is here. And the market is attracted to money. So instead of us thinking that the market is just going to bounce off, have a good time, and then eventually come out, no. That market is going to do this. It may do a little bit, but it's going to come out a little bit. Take some money. Maybe come back up. Maybe come like this a little bit. Because they don't want you to ever know what's happening. And maybe even do like this, and they will take out all those stops, and then finally make that move where they actually want to go. Okay, so now let's find that in the market. We're looking for equal highs or equal lows, meaning that they are on the same level. And here we go right here. Here's a good example that I marked up on Sunday/Monday of this week. We'll use this to make it faster. Okay. And you can really see I'm not playing. Like, I'm really using this. All right. So like I was saying, this is liquidity pool equal highs. How I know? Look at this. Look at all these touches. You remember what I was saying about that wick, about that line, and how they may want to come up. Let's see how many times we have that touch. And it's all in here too. Do you see how many times it touched? But what did it do? It never truly went higher. What was the true intent? They wanted to go lower, but there was what? I'm gonna show you. I'm gonna show me too. Money. There was money up here. So now that the market took out the money, for me, I trade in steps. So step 1, I'm looking for liquidity sweep. That's my first activation, and that's why I named the series Mastering the Sweeps, because I'm learning, because now I see that all sweeps are not the same. Like this market, I want to keep you on your toes, but that honestly, it keeps it fun. You must always keep growing. Okay, so step 2, I'm looking for a strong displacement in this area. Now, okay, and I'm still learning about displacement too. But one thing I know for sure, if I want a strong displacement, I want more red candles going down. I don't want it to have to consolidate and then go down. Now, don't get me wrong, this is still a displacement. It is, because it's a strong move and you see it's more red candles. I'm going to stop calling it red candles because building up the vocabulary. Where you see more bearish candles. So this is just not a grade A+, okay, displacement, but it is still a good displacement. So I'm going to put my displacement. And a displacement is proof of intent. Meaning that smart money is showing me what it really wants to do. And I'm going to put this area in a little white box so you can see. So all this little area is my displacement area. Another recording, I will show you a better, a plus a displacement. But for right now, this works. Okay, that is step 2. My displacement. Proof of intent. Now that I have that, I have my step 1 and my step 2. I'm looking for my step 3. My step 3 is my change of direction. Meaning, if the market was going bullish, because remember, bullish is up, then I'm looking for a change of direction. I want it to go bearish. Okay? And if we have trouble with the terms, think of it like this. So they call the green candles, or when the candles are going higher, okay, bull or bullish. Think about a bull, and where is his horns? They're pointing up. So think about, hey, his horns are pointing up, so bearish is green. For I just said bearish, my bad, I meant bullish. So now let's talk about the bearish. So the bearish, I think about a bear, literally a bear, and his claws. Where is his claws? Going towards the ground. It's going down. Okay? So red, bearish, down. Think of his nails. If it's going up and it's green, think of a bull's horns. They're going up. But all right. Quick vocabulary. So now, my change of direction. So here's my structure. There was a lot of touches towards the bottom too. Like in this little area, there's a lot of touches. Now that shows me, hey, that market for some reason is just, it doesn't have enough strength. Until when this candle right here. This candle right here. Now this candle is my change of direction. And it's super easy. I promise this is super easy. When you are able to see it and everything is slowed down. But why is this my change of direction? Because we already said that this is my liquidity pool, or quote unquote support. How is it support? It was bouncing off until it got to this candle. It closed below. What is closed? The body is underneath. Not just this little white, this little skinny line, which we call a wick. No, the body is closed. So now I have all 3 steps. I can now look for my last step. My last step is my entry, which is my OB, order block. This is my entry, but I used to get so stressed out, like when the market does not come back to my order block. Until I learned this, and this has helped my mindset. Even though the OB is technically my entry, don't think about it as my entry. Think about it as my area of intent, meaning that maybe the market wants to come back, because the market doesn't owe anybody anything, and nobody knows what the market will do. Okay, so I wanted to see that the market came back first, okay, and then continue down. So just because that step 4 did not happen does not invalidate this entire move. This is a solid trade. It's just the market doesn't obey people or care what you want. But that is my strategy. That is what I'm mastering. So now, internal structure versus external. Okay, so I'm going to use this pink line for my external. External is to see the swings. I see that, hey, at first, this was a major move for it to go up. That was the highest point. The market never came back to this area. You can clearly see that. Then, after that move, it stops here. Why does it stop? I don't know, but you can know by going to the left. We're not doing it today due to time. Okay, because I want to always keep these videos maybe like 20, 25 minutes, maybe 30 at the max. All right, so here are my swing points that the market decided to make major moves. All right. I'll put it more like right here. Okay. So now, if this is my external move, these are my biggest points in the market before it shifts. All right. Now let's look smaller. Actually, I'm going to keep it all on the screen. So I'm going to change this arrow because we like it. Or how about this? No arrow. We'll use a different line. Let's make sure it's skinny though. Let's do one. Yeah. All right. So now that little white line that I just showed, I just changed. That is our internal. You know, I'm visual. Uh-oh. So let's make it visual. All right, so that white line is going to be our internal structure. And then that pink line will be external. I like that. Oh. Okay, and then, you know what? Let's add some more detail. So this is the big moves that shifts the market. Now these are the smaller moves that make the big shifts. Okay. So now that I already have my external structure, let's go look. We're looking for little moves. So the market came here, and what do you see? A little green. So it kind of consolidated. Then it came back over here. We see some green. And it shifted down. Then we have a whole, here I go again with the colors. Let's use vocabulary. Then we see a whole lot of bullish candles. Then we have a little bearish candle. Then we have some more. I'm not going to do all of this because that's a lot of noise. So I'm just going to come up here because it eventually came up here. But now if you want to go back and do all these small ones, you're more than welcome to do that. Okay. Then we had some bearish action. Then a little bit of bullish. And now it's starting to consolidate a little bit. And it came back up, but then it came back down. Alright, I'm just going to go a little faster now. You really cannot see the white line, so that's why I'm going above or below it. And this is where the current market is. All right, so as you can see, look at, oh wow, look at how many smaller moves that had to happen in order for the external move to happen. And this is where I live in, the internal, because it's so small. Okay. All right, and then one picture that really helped me to understand this, I'm gonna show you real quick because I have it in my notes. So I'm gonna move from the screen and I'm gonna go to my notes real quick. Okay, so this is the picture that I have been studying all week long. As you can see, the internal and the external. So, like I was saying earlier, it takes those internal moves in order to make those external moves. This is an amazing chart that will help you to see the actual chart. Now I'm about to go back to the actual chart. Remember this. Take that picture and there, let's go back. You see it now? It's not perfect, but you can see that it takes those smaller moves to make those bigger moves. And if you need to learn how to mark it up, this is a perfect, easy photo that you can take. Literally got this off of Google. Okay. But okay, I hope that we learned a whole lot today, or at least just one, because the goal is just to learn at least 1% so we can move forward. And if you enjoyed it, just simply comment what's one thing you learned today. I hope that you have an amazing day and thank you for watching.